Good evening, everyone, from Nashville. It is Monday, April 5th. I'm Charles Brown, Portfolio Manager with CB3 Financial. From COVID, U.S. politics, and the world economic scene to clarity. This is CB3 Live and the Monday Market Mashup. If you're new to the program, please go to YouTube and subscribe to us. Click the little bell so that you get updates whenever we go live or when we post a pre-recorded video like we're doing right now. I also suggest you follow me on Twitter. I post every day, tweet every day. And you actually can see the same tweets on Facebook and LinkedIn and Twitter, depending on which social media feeds you get. Looking at tonight, the second quarter 21 look ahead, year-to-date performance. Going to give you a little teaser on that as I present the full performance on Thursday night. You will not want to miss that if you guys are a client. As you know, you've been following me. The three major categories are COVID, U.S. policy, and the world economic scene. The reason that we do these programs is pretty straightforward. I'm an investor just like you guys. I'm a portfolio manager, as you know, but I'm also an investor, and I'm actually an educator as well. So those of you that watch are either clients or you're just interested in what's going on in the financial scene in America and around the world, and maybe using some of these ideas for your own education or your own investments. But basically, when I create a program, I'm thinking of two things. How can I encourage you? And secondly, how can I help you become more financially successful? That's the whole reason that the program exists. And we basically look at these three categories: COVID, U.S. policy, and the world economy. That's what we're doing. In COVID coming up here, there's really not much going on, although the U.S. did report another daily low in cases, as well as a new record for vaccinations. And I'm in that. On Friday, I got my first vaccination. It's Pfizer, and I get the next one, I think, April 24th. So I'm looking forward to that. Pushing the new weekly average for shots in America above 3 million. I predicted some time ago that the pandemic peaked in mid-January. I'm standing by that. It continues to recede, but slowly. However, my home state of Illinois, basically, and this is a byproduct of what's happened and how this pandemic has been, I think, mishandled at the certainly state government level, federal government level too, but 59% of businesses owned by minorities. I'm looking here at the stats in key sectors such as beauty salons, caterers, retailers are closed and may never open again. This is in Illinois. It was one of the states that had a shutdown mentality. Why is this important to us as investors? Because it means we have less opportunities for small businesses to develop. It's just not a good scene. It's not what we want to see. And I'm following this story. I'll have more for you on Thursday, of course. In U.S. policy, the U.S. corporate tax rate is what's in play on the infrastructure bill. And what concerns me here is the way that the government is handling this. So I want to show you this stat from years ago. First of all, we cover policy because policy has a personal impact, but it also has a portfolio impact. So that's why it's a major theme in our program. Corporate tax rates have continuously declined for the last 40 years. Look at the worldwide weighted average and the worldwide average. The weighted average really, it's a complex formula, but just look at the yellow line. I mean, it's just gone straight down since 1980, 40 years. But now that's getting ready to get a bump, and I don't think that's in our best interest. I'm not at all in favor of this. In the state where I live now, Tennessee, we have conservative leadership, and they certainly do not want to see the corporate tax rate increase. Janet Yellen was just on the news today. I saw her on Bloomberg suggesting that we should have a worldwide corporate tax rate. So how is that going to work? And how are we going to be able to count on cooperation with that? I think the answer is to keep our own corporate tax rate low, and of course individual tax rates too. Why do I mention this as a portfolio manager and educator? Because lower taxes means people and companies have more money to invest in their financial future, and that's what we want to see for sure. Okay? So moving forward, the world economy is the next topic. We cover basically the world economy in these subdivisions here. If you're new to the program, you'll see me go through these in more detail on Thursday night. But for tonight, We're just looking at where we are in the S&P and the NASDAQ and the Russell for the year. The Russell almost 15% on the year, the Dow 9.5%, catching up. The S&P at 8.6 and the NASDAQ, which was last year's leader, at 6.3. I'm encouraged by this, and as I've indicated, I will show our performance going back 5 years in our 4 programs. I'm still compiling data for the quarter, and I'll have this for you guys on Thursday night. But looking at what's going on in the markets, I'm encouraged. I really am. We have new highs in the S&P today, new highs in the Dow. The Russell is close. The NASDAQ's lagging, but again, I've talked so many times about how you have to have all market sectors and all market asset classes participating for a secular bull market to continue. So we'll be discussing that. Our featured stock will be Google. At least that's where I'm thinking right now. As far as economic indicators, the non-farm payroll report last Friday just knocked it out of the park. 916,000 jobs, the highest amount of new jobs since August 2020. So for those that say it can only happen in one type of administration, Democrat or Republican, just not true. The market's going to do what it wants to do. Unemployment rate fell to 6.0 from 6.2. So just great news. And I think part of the reason why the market was so strong is because this coming infrastructure bill. Now, I mentioned earlier that the infrastructure bill, if it raises corporate taxes, that's not a good thing. But certainly the people that are following the markets think that this infrastructure bill is going to be positive for the market. So I am certain that this stay-at-home economy is going to be here with us for a while. And if you don't believe me on this, let me show you this stat. So this is the unemployment report I just referenced, 916,000. The survey was only 660. So look at the red bar there. That's just a huge jump. And it's in the best direction possible. It goes all the way back to August, as I said in my commentary earlier. But we love the way this is moving. We're pulling out of this pandemic really, I think, faster than anybody expected. But if you're thinking that, maybe this stay-at-home economy is not going to be here, look at the employment numbers, the net change of employment for Amazon versus everybody else. You really need to stare at this chart for a minute. I mean, what this is saying to me is that this is not going away. This stay-at-home economy, that's why Amazon is hiring so many people. It's going to be here with us for a while. More good data that came in, ISM service, which is, I'll tell you more about this Thursday, but it's a statistic I talk about every month. It's basically looking at the service sector and the number of jobs created just in that microcosm. The number, let me see here, the highest number since 1997, a 63 reading, which was expected, to be about 55. We're just continuing to see the market pull away from this morose. A year ago, we were in this awful bear market. For the Fed, really nothing happened. It's a quiet month. They're going to meet in April, late April this month. Housing, we're waiting on existing home sales. In the crypto corner, we've got Bitcoin with a tremendous first quarter return. This is the best return seen in years, I think 4 years, for a quarterly return. In other words, January through March. We're kind of hitting a ceiling at $60,000. It's hard to believe. When I first started trading Bitcoin, it was under $10,000. But, it's just really promising. The overall crypto market's very strong. And here's a little factoid for you. I'm going to read this, the entire global real estate market's estimated to be $380 trillion. $380 trillion. And you could buy it with just 6.6 billion Bitcoin. Get your head around those kinds of numbers. Pretty crazy. So we're continuing our American energy portfolio series. This week we're talking about hydro energy. Those of you that have been on watching, you've seen that I did last week on American energy. I did the section on, let's see, get my thoughts together here. I've been gone for a week. So we did fossil fuels. We're going to do hydro. We're going to move on to that, to nuclear, and we're eventually going to get to the recyclables. And then we're starting this series that I've been telling you about, investing in post-America, and why this is important. Post-COVID America is a different place than pre-COVID America. And I think that it's going to involve financial freedom challenges, and it's just something that we really need to look at as investors, because I think the landscape has seriously changed from when we started this trek together on these videos, more than a year ago. So we're going to explore that. It's going to be a very full episode. Hope that you'll join us for that. If you know somebody that might want to watch it, definitely tell your friends and family. Second quarter outlook, the year-to-date performance. This is the link that you can use to sign up for being online on Thursday. Just reminding you again, if you're new, be sure that you subscribe to us on YouTube. Click the bell to get updates. Follow me on Twitter. Tell your friends, and we really would appreciate it if you would give them a notice. So we will see you guys on Thursday night. This has been your Monday Market Mashup. I'm Charles Brown at CB3 Financial, where we don't just manage your assets, we become one of them. From COVID, U.S. politics, and the world economy to clarity, this is CB3 Live, your Monday Market Mashup. We'll see you on Thursday night.